For further analysis, we are joined by Nader Cyrus Itayim, a Middle East Gulf editor at Argus Media, live from Dubai, United Arab Emirates. Thank you for joining us. So, the latest US strikes on Iran and Tehran's response have pushed oil prices higher again. So from an energy market perspective, so how serious is the risk that this conflict could trigger a prolonged global oil supply shock?
Right. Well, thank you again for having me. It's a pleasure to be with you. I'd say it's very serious. Many kind of look at the current tit for tat and just expect that, the worst that could happen is a recurrence of what we saw during the first round of fighting in March and April. Global markets at that point, they managed to navigate that round in a fairly straightforward manner. I think you saw prices maybe topping $115 per barrel only momentarily. Why? That was largely because of contingency measures that big consumer countries that implemented to sort of temper demand, but also to draw significant volumes of oil out of global inventories. But today the picture is very, very different. I mean, despite 2 weeks or so of respite, inventory levels they're still at critically low levels, and we simply do not have the supply that's needed in inventories to tide us over for another extended period of time. Now, Iran knows that full well, and that's really one of the reasons why it is holding strong at this point and not giving in, despite the threat of renewed fighting.
And much of the fighting is now centered onto Hormuz. So with reports of attacks on commercial tankers and Iran introducing legislation on the management of the strait. So how concerned is the shipping and energy industry?
I'd say it's very concerned. The industry, it's sort of been held hostage to this game of chicken between Iran and the US for some time now. And it's seen so many false starts and so many mixed signals. I mean, still today, that continues. You have the Iranians, the RGC, saying that the strait is closed, and yet at the same time, you have the President of the United States saying on an almost weekly basis the strait is open. Others have essentially taken that on board. They go into the strait, and yet they come under attack. And in some instances, you have casualties. We saw that overnight when it comes to two tankers, UAE tankers. So this situation is incredibly difficult. It's unsustainable for seafarers. There were many who were stuck on vessels for weeks on end, and there are those who are having to sort of go into this situation. So it's incredibly tough. And many vessel owners are rightly refusing to send vessels and seafarers in. So as for the energy industry, again, concerning. I think you saw all Gulf producers hit significantly by the earlier closure of the Strait of Hormuz, some obviously more than others. And you've seen how keen a lot of those producers have been to sort of make up for lost time, ramp up production at rates that were unthinkable previously. But ultimately, I mean, those recoveries can only come and continue if the strait stays open. So once it closes again, things will ultimately come to a standstill once again.
Much of the fighting is now centered on the Strait of Hormuz. So with reports of attacks on commercial tankers and Iran introducing legislation on the management of the strait. So how concerned is the shipping and energy industry? So
it's as I said previously, I'd say it's very, very concerning. But I mean, obviously now I think the conversation's shifted to the blockade that the U.S. president announced yesterday that's supposed to come in later today. I mean, that blockade is real, and it is a policy decision that it's one of few policy decisions that Washington has taken that has actually worked in the way that it would have when it comes to this particular war, in that it limited Iran's ability to, import and export products, which of course include energy in that. So with that, they sort of cut off Iran's ability to export oil, and with that, a significant portion of its revenues. So, I mean, the issue before was that Iran already had significant volumes of oil sitting in tankers offshore that it could sell first, which provided something of a cushion for Tehran at that period. So it was working. The Iranians themselves admitted that. But I think what we would have needed to see was this blockade stay in a little bit longer. And that's really what many in the US were complaining about and dismayed by when the US came and signed this MOU with Iran. So I think that's where we are at this point in time. It's really one to watch for the industry.
Many thanks, Nader.